Hey everyone, Daniel here and welcome back to another video. Coinbase just came out and reported their Q1 2021 financial results, and in this video we have a lot to cover. But before we go through the formatting of the video, first and foremost, no matter if you own Coinbase stock or any other cryptocurrency company out there, one thing is for certain. Coinbase is at the face of the cryptocurrency industry. If you want to buy Bitcoin, Ethereum, or any other crypto, most people are generally going to go to Coinbase. So their performance will most likely dictate a lot of the performance of the cryptocurrency industry as a whole, and a lot of cryptocurrency companies like potentially Voyager Digital. So, even if you aren't invested in a company like Coinbase, it might be very beneficial to take a look into their financial results and exactly what they have to say about potentially the cryptocurrency industry as a whole, and exactly what's going on in the sector. So, without further ado, let's go through the formatting. First and foremost, we're going to take a look at the Q1 report. Exactly what was reported, how it compares to projections, and dive deep into exactly what the company spent money on. Next, we're going to go through highlights of the company's conference call, taking a look at exactly what they said, some of the questions that they answered. It really is quite interesting, some of the topics they covered. And lastly, we're going to go through my projections for 2021. There obviously is no guidance given out by the company for either Q2 or full year 2021, but I actually have some pretty interesting data that might project a potential valuation for the stock by the end of this year. So if you enjoy these updates, please consider subscribing and let's get into it. First and foremost, earnings per share, $3.05. This is pretty much in line with analyst estimates. It did actually disappoint a little bit. Here's why. Revenue was at $1.8 billion. Net income for the quarter was $771 million. First and foremost, this is a very, very profitable company. Great to see the profits coming out of this company, just phenomenal. Out of $1.8 billion in revenue, $771 million bucks, that's in and around a 40 to 45% net income margin. Huge. When we look at how this compares to their original projections, total revenue was originally projected or estimated to be right around $1.8 billion. That's what we got. Net income, though, was supposed to be between $730 and $830 million. A little bit more of a potential kind of swing when it comes to that net income. And what we ended up getting was around $771 million. So closer to the mid-range of the two. Analysts were expecting a little bit more when it comes to that earnings per share. But, first and foremost, it is very important to understand that Coinbase as a company, it's very difficult to project exactly what their numbers will be due to the fact that it is entirely based off of volatility within the cryptocurrency sector and the amount of people that end up doing trades. That is almost impossible to project from an analyst's point of view, but, we got this guidance from the company. We got results today. It was pretty much in line. So nothing shocking from that. Now, what I want to do is take a look at their shareholder letter. Three main things actually popped out to me. The amount of institutional trading volume in Q1 of 2021 has grown significantly and outpaced retail trading volume substantially. In Q1 of 2020, we only had $18 billion in total institutional transaction volume within Coinbase. Now, that number totals $215 billion within just Q1. There are a lot more institutions getting into the cryptocurrency sector, and that is evident with this one statistic here pointed out by Coinbase. So next thing on the list here is exactly what percentage of trading volume went to different cryptocurrencies. We'll see that Bitcoin is at the forefront and is almost a majority of their total trading volume is transacted through Bitcoin. If you add Ethereum, right around 60% of their total trading volume consists of just Bitcoin and Ethereum. This shows the concentration within the space in those two assets, as they are the two biggest names in the cryptocurrency sector. Then you obviously have some of the smaller coins making up 40%, but a large majority is still Bitcoin and Ethereum, and this shows that the sector is still concentrated within those two cryptocurrencies, and that we haven't seen, that significant of a move in terms of diversification to potentially other assets out there, like Polkadot or Cardano or XRP or, other projects along those lines. So thirdly, I want to take a look at Coinbase's assets. Currently, we'll see that institutions now hold more cryptocurrencies than retail investors do. This is very interesting, as one of the arguments against a potential cryptocurrency winter is the fact that a lot more institutional investors are getting into the cryptocurrency system, potentially causing a stabilization in prices of things like Bitcoin or Ethereum. In this situation, it's showcased that institutional investors are in fact investing in cryptocurrencies and are in fact holding. It's also apparent that Bitcoin and Ethereum make up a large majority of Coinbase's total assets, currently making up 76% of total assets. Absolutely huge, really showcases their dominance in the market and really shows exactly what investors believe in, at least at this moment in time. Currently, a majority believe in Bitcoin. Second most runner-up is Ethereum. So now that we've taken a look at the company's revenue and profits, we can actually dive in a little bit deeper to take a look at where revenue came from and where profits went in terms of capital expenditures. First and foremost, we'll see that net revenue totaled $1.6 billion. This is revenue collected from the trading side of their business. Now, other revenues, what is this? This is the different products that they offer, whether this be subscription packages or other products along those lines. In my personal opinion, this other revenue section is set to explode over the next few years and will become the main story behind Coinbase, in my opinion. So seeing this growth is absolutely phenomenal. This was just a couple of tens of millions of dollars back in Q1 of 2020. Substantial growth year over year. We add these two together to get a total revenue of right around $1.8 billion. And here I have other revenue being right around 11.3% of their total revenue. Again, I expect this number to increase over time. Now, transaction expenses, this is essentially the cost of this revenue. Right around 13% of their total revenue is spent on actually, rather taking care of the whole process of the different transactions and other things along those lines. This shows the profitability of their business, as cost of sales is only 13%. 87% gross margins on the other hand. Now we have to add different expenses such as technology and development, sales and marketing, general and administrative expenses, and other operating expenses. We add all of these together and get a total operating expense margin of 45%, meaning for every $100 in revenue that comes in, 45.2% of it, at least this quarter, was spent on things like expenses and sales and marketing and research and development. So that leaves us with an operating margin of 54.8%. After all expenses were incurred, a margin of 54.8%. Huge margins at a company like Coinbase. And if you own any other cryptocurrency exchanges or brokerages, this is big news as it showcases the profitability of the cryptocurrency brokerage space. With 55% essentially EBITDA margins at the business, absolutely phenomenal. Now, what we have here next is essentially a provision for income taxes. This is the money spent on taxes. Currently, this sits at right around 22.6%, so that is their tax rate at this moment in time, and we can expect this to stay at least pretty stagnant over the next potentially couple of quarters and into 2022. So, getting rid of those taxes, we get net income of $771 million, or essentially a net income margin of 42.8%. Such a profitable business, and I love to see it. Now, looking at this, obviously, these numbers will change with time, but the interesting thing is, in the conference call, the company gave us a lot of insight to potential increases in certain expenses. So what we're going to do next, I'm going to go through the company's conference call. Actually, not the whole conference call, but take you guys through a few highlights, what I think was important to both Coinbase and the cryptocurrency sector, and then we're going to apply some of the things that they mentioned to this revenue to potentially get a valuation of Coinbase using 2021 numbers. So let's get into it. First and foremost, they started off by talking about altcoins, exactly the path that altcoins are taking in 2021. They're saying that there has been an increase in demand for altcoins across the board, but they see longer term altcoins becoming something like the App Store, where there are millions of different projects around the globe that you can choose and participate in. When we talk about Dogecoin, they're planning on getting into Dogecoin within the next 6 to 8 weeks. So obviously they are a little bit behind when it comes to Dogecoin, as a lot of the hype is happening now and has been happening over the past couple of weeks. So although they are expanding into it, it is a little bit disappointing, needless to say, that it still is 1 to 2 months away. They are saying, though, that new asset additions will be a focus of theirs moving forwards. Next, they talked about revenues and profits. They said that we can expect revenues to grow going forwards as volatility continues to be evident in the cryptocurrency system. And, they're going to continue introducing new products alongside that to essentially make up for the potential of a feeless future. Obviously, there is that concern that, as the cryptocurrency market continues to grow, fees will go down to the bottom. Coinbase themselves said that they don't believe in the feeless future of cryptocurrencies, at least in the near term, and that they're constantly working on new products, such as the other revenue that we just talked about, to make up for any potential decrease in the amount of money they're making off of commissions. Next, they talked about increased or decreased periods of stability and how this plays to the volatility of cryptocurrencies. Sometimes we have situations where Bitcoin, Ethereum stays stagnant. Coinbase doesn't make much money in those days. Coinbase makes money when there is either big red or big green, when these cryptocurrencies make massive moves, because on those days, everyone is buying and selling. And I think this is a huge thing that everyone still has yet to understand. Cryptocurrency brokerages don't lose money when Bitcoin falls 10%. In fact, those are some of their best days because you have a lot of new net deposits and you have a lot of trading volume on the platform, essentially creating a lot more revenue. Talking about trading volume, they said that at their current pace, they're expected to either meet or exceed their Q1 volume at the current pace. Huge news, guys. When we were talking about, previously a couple of weeks ago, about Coinbase and their potential for the remainder of 2021, we expected a drop from Q1 due to the euphoria we experienced within cryptocurrencies back in January and February. What they essentially said here today was that trading volumes at today's pace are most likely going to potentially outpace Q1's targets, which it's phenomenal. It essentially means that we can expect potentially a repeat of Q1's revenue in Q2 and beyond. That's going to be big, playing to my potential 2021 targets, which we will look at in a moment. Next, they talked about decentralized exchanges. Obviously, this is something that a lot of people are saying is a big threat to the cryptocurrency brokerage space, something that Coinbase is in. They did mention that Coinbase is a centralized exchange, but will be offering different DeFi products down the road and integrate these different offerings into their platform. I personally believe in the future, a lot of brokerages like potentially Coinbase or like Voyager Digital will be the place where you store your money, and those platforms will integrate different aspects of DeFi technology within the platform to allow for the best of both worlds. Now, they actually said they're not trying to win when it comes to fees. They're trying to win to be the most trusted brokerage out there and offer the most versatility when it comes to different products. So this is important. They actually said, they're not expecting big potential, declines in their fees, but the fact that they're a secure brokerage and will continue to be a secure brokerage moving forwards will make up for those fees and be one of the reasons as to why customers will continue to want to get onto Coinbase and use it moving forwards. But obviously, this does create a potential opportunity for other companies like Voyager Digital, like potentially Gemini, to step in and steal market share. Obviously, Coinbase is a massive company, and I personally believe there is a lot of opportunity for other companies out there to offer potential more versatility with products and steal some market share from this company. When we talk about government regulation, obviously this is a topic of conversation that a lot of people are talking about as a potential threat to the cryptocurrency system. Coinbase says they embrace regulation and that for the industry to really reach the masses, the billions of people out there, it will need to be regulated. Although this does pose some potential long-term risks, with potentially having to grow a little bit slower and operate in a slower environment, overall they see this as a positive, as it will allow more individuals to get access to the cryptocurrency space as a whole. On international growth, they said this is a top priority, but they are not growing fast enough or as fast as they would like in the international space. They say that licenses do take a lot of time, but overall they are very bullish on the global market, especially Asia. They pointed that out as a potential growth factor moving forwards. In the institutional space, they actually said that they're trying to become the AWS or the Amazon Web Services of crypto and help other companies or banks to get into the cryptocurrency system by providing the technology needed. This is big. This is one of those things that kind of falls under that category of that other revenue when we look at Coinbase, revenue that isn't generated from commissions, but generated from software, or generated from subscriptions, or generated from other potential products that they're offering to companies, institutions, and retail investors. Next, Coinbase advertising. Currently, less than 5% of Coinbase's total revenue is spent on marketing. They expect this number to go up over time to essentially make up for growth going forwards. They expect advertising as an expense of total revenue to get to 12 to 15% in the short term. This is big. Again, one of those things that we can use on our projections for the remainder of 2021. They're spending a lot more on advertising to get more growth moving forwards. And keep in mind, when Coinbase spends this much money on advertising, this just brings more awareness to the cryptocurrencies industry as a whole and is a big overall positive. Now, lastly, commission. Coinbase charged on average 1.2% commission throughout the first quarter of 2021. This is down from the 1.4% they were charging previously. A lot of this is due to the fact that a lot more individuals are signing up for Coinbase Pro and trading in higher volumes, leading to lower transaction or average commission fees. So that is exactly what they said in the conference call, some of the main highlights and takeaways. But you know what? Let's take some of these numbers that they said and apply them to my 2021 targets for Coinbase. Let's do it, guys. So first and foremost, we have to understand that I'm going to keep revenue stagnant for the remainder of the year at $1.8 billion. This could very well be considered a little bit conservative. I picture this more of a base/bull case due to the fact that we just went from an expectation of revenue declining throughout the remainder of the year to essentially revenue that might actually stagnate. If that happens, that is absolutely phenomenal. Next thing that we need to keep in mind, I'm going to keep these percentages the exact same. This talking about other operating expenses, general and administrative expenses, technology and development, and transaction expenses alongside that. What I'm going to increase is sales and marketing. It's pretty substantially, upwards of 15%. Now, in the conference call, they said they expect this number to get to 12 to 15%. I'm going to use the upper range. They're spending a lot on advertising, and this is one of the things that will need to be done in order to maintain or grow their revenues as a whole throughout the remainder of the year. Because of this, we're most likely going to see a decrease in profitability at the company. Obviously, they're still a substantially profitable company, but compared to Q1, there will be a bit of a decline, in my personal opinion. Now, this gives us operating income of $835 million. Again, you take that 22.6% tax rate from before, which translates in this time to $188 million, and you get net income of $650 million, or a net income margin of 35.9%. Now, what I'm going to do is take this and multiply it by Q2, Q3, and Q4. You add all of this together and you get potential net income for full year 2021 at $2.7 billion. Now what we can do is come up with a proper valuation. The share price at this moment in time, from my understanding, is at $283.61. The fully diluted share count at the company is 261.3 million shares fully diluted, which gives us a current market cap of $74 billion. Using this net income and this current market cap, we get a potential current price to earnings ratio of 27.3 using 2021 numbers. Now what you can do is take this number and decide a potential price to earnings ratio moving forwards. If you believe a company like Coinbase could potentially be trading in the price to earnings ratio of 50 to 55, you can expect a double up in share price for the remainder of the year. I'm not going to make a projection because I'm not confident with a number for an exchange like Coinbase. I think their growth will be very volatile, and we don't have that much clarity into what we will experience in Q2 and beyond. This is obviously a guess, assuming that net revenue stays stagnant, which in my opinion would be a phenomenal situation for a company like Coinbase, which just experienced absolutely crazy growth from Q4 of 2020 to Q1 of 2021. This is my personal opinion, guys. If you have any thoughts on what I said in this video at all, let me know in the comment section down below. I will be making a video comparing Coinbase to Voyager Digital within the next couple of days, so stay tuned for that and make sure to subscribe to see more videos just like this one. Thank you all so much for watching and have a great day.